Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to the Moving Iron Podcast. This edition of the Moving Iron Podcast is brought to you by John Deere. I've got Greg Machinery Pete Peterson on to talk about what's happening in the auction market. Greg, how you doing today?
I'm doing well, Casey. How about you?
Can't complain, any man. Can't complain. I'm down here in Central Florida in July. I can't think of a better place to be than Florida in July.
Well, hey, it's 90 up here in Minnesota today, so.
Yeah. Well, I was thinking maybe I'd go to Fargo in January and see if I can't get the same effect. Just the opposite, right? Anytime
is a good time to be in Fargo. Fargo's got it going on, man. We'll represent for our friends in Fargo. It's a little chillier though in January.
A little bit chillier than that. A little bit chillier, but we've seen some stuff happen in the marketplace right now. We've talked about this a lot, where July is kind of that jumping off the boat point where you're on the fence one way or the other, which way the market's going to head. We're seeing some stabilization in the marketplace. We've talked about this, but this is also peak dealer auction time frame, and you brought up a couple sales that you're watching, maybe going to go here July and August time frame.
Yeah, again, I think you're right, Casey. End of July in particular has always been kind of a inflection point, I think, in terms of starting to see a lot of, when dealers do take excess inventory out to auction. It's sort of when we start to see it begin to, I won't say pile up, but kind of pile up. So this week, we're recording on a Tuesday, but so tomorrow there's a couple I'm watching. One up in north of the border in Saskatchewan, McDougall Auctioneers has their pre-harvest sale, 39 combines, 25 class, which will be really interesting. We got 10 8700 TT track machines, 20 and 21 models, 5 Case H 92 40s, 4 16 models, a bunch of headers, 24 Draper heads. So, that'll be interesting. And the same day, also tomorrow, as we're recording this, July 23rd, our friends at Merit Auctions have a kind of a unique sale. We know how good Zach Heiner is, but they're having it. It's for H&R AgriPower, of course, great Case H dealer, centered out of Kentucky and spoken out different directions, and then Truland Equipment out of Indiana area, a John Deere dealer. So they got about smaller sales, about 50 some pieces, but some good combines, a lot of late model tractors. And then Steffes Group has a sale for RDO equipment, excess sale on Thursday, the 24th. And Saturday, the 26th, is our friends at Wheeler Auctions down in Paris, Missouri, their annual late July sale. I looked this morning. I think they're pushing 3,000 items on that sale. We filmed that sale last year for Machinery PTV, and, of course, summer of 24, it was an avalanche of dealer equipment hitting the auction. I don't think it's as much this year, but it'll be interesting to kind of set the market, get a temperature gauge on how all this stuff sells this week. Yep.
Yeah, this will, like we talked about, this is where we kind of set the tone for the year and what that looks like, and as things keep pushing through, obviously dealer sales are kind of thing. A couple of those dealer sales aren't really going to bang the market too hard. What you see happen, but I think what I'm really paying close attention to is the volume of sales that we see going through the end of the year and what that mix look like. And right now that mix looks largely towards the farm sale type approach, whether it's a retirement sale, estate sale, whatever it might be. Those are the ones that I'm paying close attention to, because typically those should keep the price of auction values up a little bit higher. Typically they sell more than what you see at your standard consignment sale. Mm-hmm. But again, it comes back to volume, right, Greg? So as you see that volume start coming through, supply and demand and what that looks like and how things are tracking towards the end of the year. I guess as you look at this, do you have any historical counterpoints that you can put out there that show, hey, this is kind of the norm, or do you feel like this is a little heavier than what you've seen in your career?
Well, I think it's definitely going to be more, farm-related auctions the last half of the year. I'd say probably piling into that November, December period. And a combination of, older farmers maybe, it's been a little tough stretch here on the grain side, so maybe deciding now is a good time to retire. And then, unfortunately, maybe some more sales that are out of necessity. So in terms of historical precedents, this is where it really is helpful to pull back, because I think it's going to be more than we've seen the past couple of years on the farm side, but maybe historically more normal if we peel it back over 5 years ago. So, 5 years ago was the pandemic, and that kind of skewed everything in so many different ways. The drop off in the number of sales we saw in 21 and 2. I think we'll definitely see more sales. And it just looks to me, even the numbers that are coming in, the sale prices through July, just kind of keep showing the fact, in the sale I covered last Monday out in Mandan, North Dakota, granted it was livestock related sale, but good condition used is doing pretty well here, mid 25.
Yeah. So that's one of the things too that I've started to pay attention to. So typically when you're in these downturns, you start seeing the things move. There's always a group of machines that kind of settle in. Typically tractors, you start seeing that it's kind of a wide range, but typically the narrowness of it's between 1,500 and 5,000 hours. Typically 3,000 to 5,000 hours is kind of where that sweet spot of tractors really start to move. You're starting to see that. You're starting to see some older, higher hour combines start to move during this time frame, which we've talked about that on here, where we've seen some of those 750 to 1,250 hour combines roll through, and you've seen some good pricing on those. It feels like it's starting to kind of, the retail side of the marketplace is starting to kind of catch up with some of that 1 to 2 year old stuff that we've talked a lot about on here, where you're starting to see that come in, but that price is starting to settle down. Do you have any data that shows right now that you're seeing some uptick in at least in auction value on that 1 to 2 year old stuff as we head towards the end of the year?
Well, the 1 and 2 year old stuff, again, I'll be, in the next couple of days, we're going to get a big dose of it. Tractors and combines. What I would say is, I guess through May and June into July here, the 1 and 2 year old stuff we've seen sold is, when we look at the prices, it's stronger than it was. And again, historically, Q4 on the calendar, as like we've talked about before, it's literally like 22 of the last 23 years. Yeah. It spikes higher because, people looking for that tax deduction. It was not that last year. Last year was only the second time it fell. So from where we were Q4, again, even the 1 and 2 year old stuff is a little bit stronger than it was year end. So again, to me, it just felt like a year ago, if you'd wind this back, if we were having this conversation end of July of 24, it'd be like, this avalanche is just, we're in the middle of it, and when you're in the middle of it, then you got to wait till it shakes all the way out. And what it feels like, again, Casey, we've touched on it, but the last big downturn, from mid 13 through 15, that took, 2 3/4 years for that avalanche to kind of find footing. And the footing so far is holding, that we've seen here in 25. So basically fell hard for a year, which is a lot shorter than 2 3/4 years. So we'll see what happens this week with all these, late model stuff. But so far, our data is showing that it's definitely solidifying.
Yep. Everything's pointing in the direction, whether it doesn't really matter what you're talking about. Even on the loader tractor side, like 3 or 4 months ago, you and I talked about the stagnation of the loader tractor market and how we were surprised by that. And even now we're starting to see that break loose and move forward now, where you're seeing some of that 130 to 170 horsepower loader tractor really start to peak up. And which is a sweet spot, that's the sweetest spot. That 150 horsepower loader tractor is typically the kind of the bread and butter of that horsepower range of tractor. But as you're watching these things move along, there's not one thing out there that I can point to that's not found a footing in the marketplace as of where we're at today.
Yeah, that's an interesting comment, and I would say that's accurate based on our data, which is unusual. Usually there's some dead horse out there. Yep. 24-row planters, ouch. Horse sprayers, ouch. Forage choppers, ouch. UTVs a couple of years ago, ouch. And yeah, it's just that, again, there's, in a year ago, we could sit here and say high horse tractors were, rejiggering downwards in values. That's just the way it was. Yeah, I mean, you get into that, 120 to 200 horse range, even up that high. I mean, a big iron had a sale last week. That was pre-def, of course, and pre-def has ramped up 5x here the last 18 months. But they had an '08 John Deere 7730, 1,661 hours out of Henderson, Iowa, that brought 150 and a quarter, fourth highest auction price ever. But it was interesting, and I mentioned this to Chip Flory when we did the radio the other day. I find this fascinating that the 9 highest auction prices ever on Deere 7730s have all come in the last 4 years.
Yep.
So that's your ramp up in pre-def, farmers deciding with their checkbook. Now, here's one interesting point for you, Casey. We talked about July being kind of the historically this month of dealers, with a few more items at auction. And we talk a lot about the ups and downs in the market over the decades. So I got looking at machinerypete.com for the highest auction price 25 years ago this month, July of 2000. And the 8 or 9 highest prices came from one auction, July 12th of 2000. It was called Steffes Auctioneers at the time, before Steffes Group. But their consignment sale out of West Fargo. And just to show you how far we've come, the highest auction price July of 2000 was $121,000. And it was a 2000 model Case H 2388 combine. So it literally was like new. It had 0 hours on it. It was a brand new combine, or $121,000 hard cash. Now, summer of 2000 was a downtime, and that was, so auction values were depressed. But they had 1, 2, 3, 4, 5, 6, 7, 8 2388s on that auction in West Fargo. So this was before online only auctions and stuff. But the prices went from 93 and a quarter to 121. So that was an ouch time for auction values. And again, we've seen ups and downs, but again, it'll be interesting to see here late July 25 what happens with these prices the next couple of days.
Yeah, and the summer of 2000, the internet was still a fad back then. You didn't know for sure if it was going to last or not.
Actually, that's a good. I mean, we put our first iteration of machinerypete.com up March 6th of 2000. So that was 4 months before that auction.
Yeah.
So I was still doing the printed books of auction prices. And the internet, it was, of course, no social media was like almost a decade away. So it was a different world for sure.
Yeah.
I find it, again, now we see combines sell at auction we've seen a couple over 600K this year. And 25 years ago was $1.21. So is what it is.
Yep. You could have been in MySpace all-star back then, Greg, before you would, if you would have got on the social media train, right? Like 2002 or whatever that was when MySpace came out. You could have.
Oh, MySpace. Yeah.
You could have.
I forgot about MySpace. Machinery Pete is not the earliest of adopters. I'm still not on TikTok. Yeah. Facebook, YouTube, I saw 2009. I saw this thing's going to stick. And so I had our oldest daughter, who's now 34. I said, honey, you got to show me how to edit video. I went down to Target and I bought a $99 flip cam on August 3rd of 2009 and put our first video up that week. And 2,300 videos later, we've had a lot of fun.
The old flip cam, I remember those.
Flip cam. I didn't have to edit too much. I just plunked it into the computer, and then I would just download. I'd say, well, okay, here's this video I shot at this auction, and it would just upload. So it was simple. That was good for me.
Easy peasy back then, right?
Yes. I still have a couple of those old flip cams. I hope they might be worth something someday.
Somebody. You know what? What's old becomes new, right? So
there you go.
Makes its way back around. All right, Greg. Last thing here to talk about real quick, and we'll get on our way here. This time of year, getting ready for harvest, fall harvest. You start looking through there. Support equipment's always one of those things that's kind of on the docket, especially when you see stuff like where we're at right now. You seeing anything out there right now when you look at grain carts and augers, those kind of things that's pointing to there's some a feeding frenzy of sorts maybe developing in those marketplaces?
That's a really good question, Casey. It's interesting. I would say I wouldn't call it a feeding frenzy, but definitely some strengthening, both with grain trailers and grain carts. On the top end, we've seen some, not as hot as it was definitely in 21 and 2, which was ridiculous, hottest we've ever seen. But I saw another tracked grain cart come through the other day, like, I don't know, it was like 115 or something like that. So, and again, I get it. That's a bit off of retail, but still hard cash for a grain cart, 115. And we had one in the 125 area back earlier this year. So grain carts have been pretty good, and grain trailers have been solid. So those two areas have been strong. Gravity wagons, this time of year, they've been doing well again. So yeah, across the grain sector, I would say, considering where profit levels are at for grain farmers, what we see a nice auger bring or a grain cart, I would say honestly maybe a little bit higher than I would have guessed, coming off of that softer Q4 24 like we talked about before.
Yep, for sure. All right, Greg, probably a good place to stop. Folks want to have you come speak at their event or have you come to their auction. The easiest way to do that, just go to the contact page on machinerypete.com.
Yep, just reach out. Our phone number's on there. We're getting a lot of requests come in. I'm going to be on the road quite a bit. Got some great auctions coming up here. Really looking forward to it. So should be great fun.
Yeah. Interesting auction coming up too with Alex Kerr over at Kerr Auctions. They've got that kind of an export centric.
Yes.
So that'll be kind of interesting to watch how that plays out. We've seen that. That's August 15th or 14th. I can't remember exact date.
Yep, August 14th. Alex just texted me, by the way, right as we were talking here. And we're going to be down. I love Alex. He's a great guy. KerrAuction.com. Check it out, folks. And we're actually going to be at Alex's July 29th sale in Mount Sterling, Illinois, with our cameras filming for Machinery Pete TV. And he has a really nice farm auction the day before, August 28th. And I'm hoping that I can get Alex and Gina to get us in the shed to show us their unbelievably nice John Deere 6030 for tractor tails, so we can film that. I'm working on Alex. He still teases me though, Casey, because years ago when he bought it at a Sullivan auction, I wrote that it was the record highest auction price ever on a 6030.
Yeah.
And every time I see him, he says, Machinery Pete, you said I paid too much. I'm like, Alex, I didn't say that. I said you bought the most valuable 6030 there is. So there you go.
Two ways. Good way to spin it, Greg. You didn't pay too much. You just got the best one that was out there.
You got the best one out there, brother. Yep.
That's right. Okay. Well, Greg and I will also be at Yield Academy.
Yes.
At the end of the Pro Farmer Crop Tour. That would be August
21st. Right here in Rochester. Yeah. Come on up for that, folks. We're going to have a great time, and Yield Academy be a great day. Tons of information. Casey and I will be there talking trends, and I think doing Q&A. So I'm really looking forward to that. It'll be super fun. I don't have to go anywhere. You guys are coming to me in Rochester. So.
And you also run an Airbnb out of your house, so people looking for a room.
Mrs. Machinery Pete, hey, she made some awesome apple cinnamon bread this morning. If we could have that for everyone, believe me, Machinery Pete's a lucky dude. So there you go.
Yep. And then moving on, summer's coming up here. That'll be in Austin, Texas, September 24th through 26th. So if you're a dealer, want to check that out, go to the events page there on AgWeb, and you'll be able to see all that there. And you'll have a good opportunity to network with peers around about what's going on in the marketplace.
Yeah, come on. Hey, across your dealer organizations, come on down for that. It's unbelievable. I'm looking forward to it. Great event you started there, man.
Great deal. Well, Greg, appreciate you being the podcast. We'll catch you again next week.
Sounds great, Casey. Have a good one.
All right. Stay tuned for more Moving Iron podcasts after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a Deere.
All right, welcome back to Moving Iron Podcast Markets. I've got Sean Hackett from Hackett Financial out of Boca Raton, Florida. It's nice enough to come on and talk about what's happening in the world of commodities. Sean, how you doing this morning?
Super good.
Good deal, man. Good deal. Well, I'm getting a taste of your Florida heat. You're always talking about this. I'm in Orlando, and we've got my son's down here for a camp, but it's been, mid to upper 90s and high humidity. I think the heat index of the day was something like 110 or 115 or something like that. So plenty hot, and but that's not just necessarily the the case here in Orlando. We're seeing a lot of heat across the Corn Belt, and you've talked about this 2-3 months ago that there was going to be this mid to late July, early August heat coming through, and it wasn't so much the daily heat that you're worried about, but it was the overnight temperatures that you're paying attention to.
Yeah, based upon what's already happened and based upon what the models say is going to continue to happen through the end of the month, you typically need 20 warm nights, meaning nights that are 7 degrees or higher for your warm nighttime temperatures to impact corn pollination enough to impact yields enough. And it looks to me like the central eastern grain belt will see a good majority, or let's say 75% of that region will see up to 20 days during peak pollination of 70 degrees or higher. It doesn't mean a major crop problem. It just means that the crop yields in that area will be off from what it could have been. And obviously that's a very high production region. I am fully expecting, the way this usually works is that the USDA is not able to incorporate warm nights into their yield models in August. What they do in August is they look at the crop rating, their crop condition rating and statistics, and so they're going to raise the yields here as they typically do in August. It wouldn't surprise me if they come in somewhere between 183 and 185. History says, though, that's the highest yield for the year, because what the warm night situation does is it doesn't make the corn plant look bad. It reduces the test weight, because the pollination is not running efficiently, meaning you're expending a lot of energy at night, which doesn't help the plant produce large grain during the day. And so if you look at 2011, 2010, 1983, these are like 3 years where we had this warm night scenario. The highest yield that the USDA will put out there for corn is in the month of August. And then they, in the October report, when they start actually looking at agronomic data like test weight, the test weight comes up short based upon, and so in August it's a volume measure, but then they incorporate test weight in October, and then they start bringing the yields down. So my expectation is they're going to raise yields to 183, 185 here in August, and by the time they get to October, they're probably going to move those yields back down to 180-ish, maybe 178, something. A very good crop, but the difference between 183, 185 and 178, 180 is a difference between projecting 2 billion bushel carryout and 1.4 billion bushel carryout. And the difference between those two measures is the difference between low $4 corn and upper $4 corn. So kind of like last year, I think we're going to make our low print here in the next few weeks, which is not unusual, by the way, leading into maybe the day of the report, maybe the day after the report. If they raise the yields and everybody gets bared up, we're likely to make our most negative psychological low during this period. We can argue what those numbers are. Last year, 385, December corn was the low. I feel like we're going to make a higher low this year based upon a lot of factors. And then the market's going to likely see a significant rally as harvest yields come in and everyone starts figuring out that this crop is very good, just not quite as good as the USDA has mentioned. And if we get a trade deal with China, where their demand for corn, soybeans, and wheat and cotton are higher than current expectations, then those carryout could actually fall even further. And it sure looks to me, if you look at the massive pivot that we've seen with China, where it was 150% tariffs, to all of a sudden overnight, yeah, we're friends again. And what happened? I mean, essentially, and I wrote this on my report this week. The Chinese obviously realized that they're not in a position to produce these high-powered artificial intelligence chips that are driving the new economy, and they need U.S. chips to do that. Without U.S. chips, they're in a tough spot. and with their economy, and they're trying to reflate their economy, it's going to be almost impossible to do that if we have 150% tariffs. At the same time, we realize that without rare earth metals, our military comes to a screeching halt, and our AI chip manufacturing and everything comes to with that. I mean, that drives the entire show here on artificial intelligence and everything that goes with it. So, and China controls almost like 90% of production and processing of rare earth metals. So for now, they need us and we need them until both of us can find a way to produce these things on our own outside of each other. That's going to take 2 to 3 years. So within the next 2 to 3 years, we have to get along.
Yeah.
And we're going to apparently go out there and speak to them within the next 30 days, Besson and his crew, to further this trade deal. And I think we're going to get a trade deal too. It won't be as big as the one we had the last time, but it'll be sizable enough that compared to the low numbers that we've been selling to the Chinese over the last 18 months, it will be very significant. And I think that that reality, along with the USDA coming down on corn yields, specifically on warm nights, is a reason to expect a pretty sizable post-harvest rally once the lows are made here over the next couple of weeks. So what I will say today is I said last year at this time, and I said in 2020 at this time, you should absolutely, positively only sell what you absolutely, positively have no choice but to sell and hold the rest. I think you'll get a much better price in the fall and later in the year than you do today. If we're correct about all of what I just said, we're likely going to put our carryouts right back to where they've been, 1.3 to 1.5 billion bushel carryout. And for a little while last year, Casey, we traded nearby corn prices north of $5. So
right.
Doesn't mean this year's the same thing, but I think there's going to be plenty of reasons for the market to find an upper $4 to low $5 number that the farmer can look at, pencil out, and works on the farm than trying to sell low $4 corn or sub $4 cash corn. I just think you just need to stop doing that in any shape, way, or form unless you have no other choice at this point.
Yeah, for sure. All right. So there's been this last week you saw some news come out about a hybrid issue where you see some causing a issue with pollination. I haven't really heard much about that since. I mean, a few stories here, nothing like I saw last week. Sean, as you look at that, anything that you see there that's concerning you?
In all the years of 3 decades of following ag markets, whether it's in Brazil or it's in Russia, Europe, the US, Canada, whenever prices are very, very low, like they are, and farmers obviously are not happy about it, which they're not, and they shouldn't be, there's always these isolated trouble spots that the farmers, understandably so, are trying to excite the market with and put out issues. What I would always say is in an area of production as large as the United States or Brazil or Russia or the EU, you can always find an area that has some trouble. You can always pick on a spot that for some reason the weather wasn't good there. They had the wrong hybrids this year. Something went wrong. There's always going to be an area that you're going to find, if you're looking for it, that's not perfect. But my experience is that they tend to be isolated and they don't tend to be impactful major drivers of overall national yield. National yield is driven by three major factors: how much rainfall fell. We have plenty of rain this year. How hot has it been during the day and night? It's been not so hot during the day, meaning we haven't had a lot of 9,500 degree temperatures during the day. The nighttime temperatures have been very hot. So we have that issue. And lastly, are the farmers going to expend the investments in insecticide applications, in extra fertilizer applications, doing all those little things that tend to pump yield, or are they going to not do that because the market's telling them they're not paying the farmer to make those extra investments? Well, they're certainly not going to be doing that this year. They're going to be doing the minimum possible that they have to try to get the crop through to the end. So when I look at all of that, this issue with this particular hybrid, it's an issue in the areas that have it, but I don't think it's a national issue. The warm nights is a more of a reason to be excited about the potential for crop yields to come up a little bit short. And because the USDA says that our carryouts are going to be 1.65 billion bushels if we have a trend line, we don't need a lot below that to get ourselves back to the 1.3, 1.5 billion bushel carryout. Those mean we don't have massive overhang. We just have a little bit of overhang that a couple of bushels to the acre below current expectations is all you need to create a market that would be more in the upper fours to low fives than upper threes to low fours. And so I think that's my expectation. So what I'd be looking for here is a low. It can happen at any time. The market is, when you look at the relative value of corn and soybeans and wheat and cotton relative to all other commodities, we're at some of the cheapest levels in 50 years, meaning the markets rarely stay this cheap independently of all other commodities. So we're looking for another attempt to put in a very meaningful long-term low. 2020, we believe, was the decade low. That was the decade low for our markets. We felt last year was going to be a secondary higher decade low. It's possible we could come down and retest the levels from last year. I don't think we're going to do that. I think we're going to make a higher low from last year, but still a third attempt or second attempt at a higher decade low. And then I think the market's going to advance based upon what we've just mentioned. And so when you look overseas, there's been a lot of daytime high temperatures in Europe and Russia, Ukraine. There's been a lot of dryness in Russia, Ukraine, and Europe throughout the core pollination season for corn. Their corn crops are going to be off, no question about it. They've had a much more difficult weather season than we've had. Dryness and high daytime temperatures. I mean, Russia has seen quite a few 100-degree days, which we really haven't even gotten close to really in the core grain belt. So when you wrap all that together, there's a lot of reasons to be very, very optimistic beyond the next couple of weeks, which the seasonals are hard down into the August USDA report, and then we tend to make historically lows. I don't see any reason why this year we're going to do anything different than that. And by the way, this is just a guidepost. We may have already made the lows. Like the rally last week off of the lows from the prior week, that could have been the final low. We may not get back down to that level. I don't want anyone to think that we have to make a new low. I'm just saying there's still an opportunity to make a new low going into the US report if they raise estimates and the market gets bared up one more time. We're not far away from that. USDA report's a few weeks away, and we'll find out. But either way, if I'm a physical buyer of corn, meal, soybeans, any of these markets, if I need to buy, this is your opportunity to do something really, really smart, like it was last year, like it was in 2020. This is a buy-side opportunity, and the farmer just needs to sell as little as possible. And if they sold 75% of the roll crop corn earlier in the year, they really should be in pretty good shape outside of corn that maybe they can't store. You know what I'm saying?
Right on. All right. Lastly, so since we've been doing this podcast, we've talked about, you've been talking about grand solar minimums and those kind of things, and how these, volcanic activity would start to pick up and those kind of things. We've seen this year, I don't know, there's probably been 3 or 4 major volcanic eruptions around the globe. And if you look at the news, there's an underwater volcano off the coast of California, Oregon, Washington area. That could greatly affect there. Mount Rainier showing signs of eruption. There's all along the Pacific Rim. There's a lot of big things. They're seeing more activity out of the worst one yet to really see activity out of is the Yellowstone supervolcanoes. They're seeing some activity there. You talked about this.
I can tell you if that volcano goes off, we have a very, very bad corn crop.
There could be a lot of bad corn crops for a while.
The corn crop's going to be 0.
There'll be several bad corn crops in a row. But you talked about that this is a symptom of a grand solar minimum, how the electromagnetic forces and those kind of things play into how the mantle moves around, those kind of things. So I guess, Sean, talk a little bit about that, what you see happening there.
Yeah, I mean, this is all part of, we know that that this period of 30 or 40 years of lower solar activity always leads to greater volcanic activity. And what we're really interested in terms of global weather volatility is when they are large enough to impact global climate, like Tonga was. Tonga was our first VEI 6 volcanic eruption of this grand solar cycle minimum. It was an underwater volcano. It kind of had a heating effect versus the normal cooling effect that the sulfur dioxide volcanic eruptions tend to have. We did see a volcanic eruption, the Laki eruption in Indonesia. That was a VEI 5, not quite enough to impact global climate, meaning I think the column height, if I remember correctly, was 18 miles into the sky. It needs to be about 25 to 30, so it was a near miss in volcanic terms. Very big. It will have a huge impact to the local region there, by the way. It doesn't mean that you won't have a significant impact to weather and the production of agriculture in that localized Asian region for the next probably 6 to 9 months. They absolutely will, but it's not going to. It's a little short of having a global impact. The other thing that we follow is we follow total sulfur dioxide concentrations in the atmosphere. So you get a VI1, you get a 5, you get a 3. They all put sulfur dioxide in the atmosphere if they're above ground, and most of them are above ground. Now, the ones that don't get up high enough, they precipitate out within 6 to 9 months. But nonetheless, we try to follow the range. And because of what you just mentioned, we've had a lot of these smaller, let's say, VEI 2 to 5 that have been going off. The sulfur dioxide concentrations in the atmosphere are on the upper end of the 30-year range. So we tend to oscillate back and forth. If we start to see the sulfur dioxide get above that range, it will have an impact to global weather. Not as much of an impact as if you had a VEI 6 or 7, which would have a massive immediate impact. But if you start to see that start moving above the 30-year upper band, you will start to have a global impact to climate. And that's something we're watching to see if this activity, that we've been seeing is enough to create that move above normalcy. And if it does, then we'll start throwing out warning bells that we're going to see some increase in weather volatility above what we would normally see, even though we've not had a VEI, assuming we don't get a VEI 6 in the meantime. Okay. We may, usually when a VEI 5 goes off, it's a sign that there's bigger ones coming. It's usually it's a momentum thing, and it leads to more. So I'm not saying maybe we're going to see a VEI 6 emanate from this, but things are getting very interesting. And remember that your greatest risk for large volcanic eruptions is when you're on the lower end of the 11-year solar cycle. So right now we're peaking, we're coming down, but we're still peaking at half of normal, okay? But as we come down, 2028 to 2032 is the trough of the next 11-year solar cycle. And if our dynamics are correct, it's called the solar dynamo. If you remember when I'm talking about this, Casey, there's 4 magnetic fields that spin around the sun at different rates, and they tend to be constructive most of the time, which leads to big magnetic field strength within pumps solar activity. But there's times when they become opposite each other, and they call it, there's a destruction of the magnetic field strength. The work that others have done that we've read, physicists that measure this kind of stuff show that we might have almost a complete destruction of these 4 magnetic field solar dynamo here between 2028 and 2038, which means we may not see much of any sunspots even at the peak of the next 11-year solar cycle, meaning the next peak we may see almost no sunspots or very, very few sunspots for an entire decade. That's something that hasn't happened since the 1600s, and that was the Maunder minimum period. What we've been telling people is that we think we could have a a 10-year period that's more Maunder minimum like. I mean, remember Maunder minimum was a 50-year period of those sunspots. We think we're going to have more of a mini Maunder than a Maunder. That decade is when we could have a wild situation with large volcanic eruptions with the highest probability of getting multiple ones going off, VEI 6 or VEI 7. Remember, Mount Tambora was a VEI 7 that went off during the last Dalton minimum. There's reports in historic books that people that were 40 miles away from the eruption had their eardrums break because of the sound compression from that volcanic eruption, because it was so large and so impactful, and dramatically impacted weather for 2 to 3 years, and we had massive crop failures and record cold temperature issues due to the blocking of the sun from the sulfur dioxide concentrations and such. So that's we think this increase in activity is leading up to that decade where we're just going to have all kinds of incredible problems with volcanic activity exacerbating the normal weather volatility cycle. And remember, the other factor that we're monitoring very, very closely, and we're actually starting to see it now, is that reversion of the Beaufort Gyre up on the west side of Greenland. It is starting, and the Woods Hole Institute is showing us starting to reverse. And if you look at the North Atlantic, it is dramatically cooled over the last 12 months from what it was a year ago to now. And if you look at the Atlantic overall, there's been a dramatic cooling of the Atlantic Ocean sea surface temperatures. I mean, we haven't seen anything like this in a very, very, very long time. But that's what would be expected, is we're going to see the Atlantic go into the cold phase after decades being in the warm phase. And the cold phase of the Atlantic is highly correlated to exacerbating weather volatility and increasing cold weather extremes. 1965 to 1980 was the last 15-year period where we saw the Atlantic go into the cold phase while the Pacific was also in the cold phase, which it still is in the cold phase. So these are two cycles independent of each other, meaning each one of them can produce significant weather volatility. We had that in the 70s. Grain markets and ag markets went crazy to the upside because of all the weather problems that we had because of the cooling of the oceans, but the sun was fine. This time we're getting the sun and the oceans synchronizing here. And that's what makes that 2028 to 2038 period a decade to watch for a series of weather events and weather anomalies, the likes that you really have to go back to the 1600s to see. And while I'm not necessarily looking forward to that, I don't think anybody would. It's going to happen whether we like it or not. And I think that if we're prepared for it and we are understanding of it, then we can take measures, especially with technology advancing like it is. Hopefully we can come up with solutions much faster, much quicker than ever before, and mitigate some of these risks so that we don't get in a situation where large quantities of our population have insufficient food to feed themselves. So,
just asking for a friend here. The Beaufort Gyre thing, that's where all that fresh cold water from the North Atlantic ice caps and those kind of things. That's where that.
Yeah, it's been clockwise. And when it's clockwise, all the melting of the glaciers in the Arctic feed into the Beaufort Gyre. It just feeds into it in this fresh pool of extraordinarily cold water. It keeps growing because the way that when it goes counterclockwise, it steals off the ability for this water to get out. It just keeps it trapped, and it keeps building and building and building until there's a climatic conditions that reverse it, and then it dumps it out. The cycle has been longer than normal. There's a whole bunch of reasons that I'm not going to go into that the Woods Hole Ocean Institute has gone over. Anyone can go to their website, read their papers, and they go over all the reasons why they believe that this cycle has been a longer cycle of the clockwise, meaning that the amount of water that's sitting here is record-setting. We've never had as much fresh cold water It's I think it's 2 times larger than it was in 1965 when that dumped out. They call it the Great Salinity Event because all this fresh water reduces the salinity of the Atlantic Ocean. It's now reversing, and so that means that the 1970s effect should be much greater than because we have that much more cold fresh water coming in. What it also does, Casey, not to get too far afield, but when you reduce the salinity of the Atlantic Ocean, you slow down the thermohaline global ocean current system. And when you slow that down, that means that the warm water in the tropics is not able to mix with the northern Arctic waters, cooling it even further. So it's like it's a self-fulfilling prophecy. One leads to the next, leads to the next, leads to the next, and you get an amplifying effect on the. It just so happens that the sun's also going to get involved with this situation. But it's already happening. I mean, you can see all that cold water, and you can see how it's been dumping into the north, and the Atlantic is dramatically cooling. And the cycles, the 60-year cycle, said that 2025 would be the year that we would see the Atlantic start to cool significantly and move into the cold phase. And we are seeing a historic year-over-year decline in Atlantic sea surface temperatures. 65 was the last time this happened. 60 years from 1965 is 2025. It's just not the Beaufort Gyre that does this. It's also how the sun and the moon and the gravitational forces impact the vertical tides or the vertical currents. When the vertical currents are low, it makes the surface of the Atlantic warm. When those currents are more active, it brings that cold water from the deep down, which is always cold, and brings it to the surface. So it's a combination of these two factors that tends to cool the Atlantic. And once the Atlantic cools, it stays cold for about 30 years. The worst of it, however, is when it's synchronized with a cold Pacific. Those periods tend to be about 15 years before the Pacific warms up and eases some of the impact of the Atlantic Ocean being cold. So your worst weather volatility, your worst extremes from this this cyclical weather phenomenon is when both are cold. 65 to 1980 was the last time that happened, and we're expecting 2025 to 2040 to be that window for the oceans at a time that we go into a almost no sunspot situation and a mini maunder. You can see how the alignment of these cycles are. They tend to align every 400 years or so. So you, like I said, you'd have to go back to the 1600s and the Maunder Minimum to have this alignment. And we know through any read of historical records of that time, whether you look at tree rings of that time, whether you look at ice core samples of that time, it was the most volatile weather we have seen in the last 1,000 years. And we do know that the food production potential during that time fell off, and we do know that obviously there was significant mass starvation at that time. Now, remember, they didn't have artificial intelligence. They didn't have quantum computing. They didn't have this dramatic ability to create and innovate in ways today that we can today that they did yesterday. And we're much better and much more efficient and much more productive in growing food today than we were. So I do think the risks are going to be not as dire and less mitigated, but nonetheless, from what we've been accustomed to, they're going to be very, very uncomfortable. Very, very uncomfortable. So that's, and ultimately what it means is that prices going forward need to reflect this greater issue of producing quantities of food that are required to feed the masses while the technology finds solutions. It's going to take time. And that's the opportunity for producers to a producer that's listening to this podcast is going to think this is doom and gloom. There's no hope. It doesn't mean everybody has a bad crop every single year, Casey. It means there's constantly big regions every year that have bad crops, but not everybody. And it means maybe part of the U.S. you're in an area that had okay weather, and then someone else had. It doesn't mean it's always bad. It just means that you should be able to make more money in the environment that I'm mentioning to you if you play your cards correctly, store your grain when it's cheap, sell it when it's not, meaning manage your inventory. Don't sell now. Put it, store as much as you possibly can. So when you do have the short crop and you're not able to sell as much as you want, you got all that corn and all that soybeans and all that wheat and all that cotton sitting in the bin that you waited for, that you can ad lib and sell at the higher prices and bring more home to the farm. Managing your inventory during this next 10 to 15 years is critical to being a profitable farmer and being in the top 25 percentile of farmers that are going to, be prosperous during this period of time. And we're going to do everything we can to advise in that manner so that our customers and those watching the show are able to do that.
So you're saying get a wetsuit or a coat?
You're going to need a coat, a wetsuit, and increase your grains and ag storage as much as you possibly can. Storing your grain, managing your grain, and utilizing insurance products to the maximum degree that you can is how you're going to get through this in very, very good fashion. The ability to make money in an environment that I'm mentioning is much, much greater for farmers than what we had between 2012 and 2020 when we had low volatility and low prices. There's no opportunity. I would much rather have what's coming for the farmer to be profitable than what we had prior to this.
Okay. All right, Sean, good stuff as usual. Folks want to reach out to you, get more information about what you're doing at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. We also have a Twitter page at Fairdex11, LinkedIn page. And once in a while, we do put out interviews that we do with Moving Iron and others, and some tidbits about how we look at the world and what we see coming up, so that those watching your show that find our work of interest can extract value from it.
Sean, appreciate you being on the podcast. We'll catch you again next time.
Sounds good, Casey. Thank you so much.
All right, I appreciate it. Stay tuned for more Moving Iron podcasts after these messages.
Well, there they are, mocking you. See you next year, loser. That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like Exact Apply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
Welcome back to Moving Iron Podcast. Got Aaron Fennell back on to talk about what's happening in the marketplace. Aaron, how you doing, bud?
I am terrific, sir. We're just middle of July, middle to tail. We're on downhill slope.
I would say with 7-8 days left in the month, you're on the back side of the month.
It's the most beautiful time of year where we live. It's harvest time in this little town.
It is. It's getting it's growing, and we're seeing a lot of wheat get out of the ground right now. So coming off the field, we see a lot of that. We see a lot of heat this time of the year too, and it's by no means
units.
Laying up. A lot of heat units right now. Got to have them to things grow. But
corn's starting to tassel.
Yep.
Hopefully it ain't. Hopefully it does.
Yeah. some of those articles I've been reading out there might be a little bit sketchy this year on what happened with the tassel.
Yeah. Yeah, it'll be. There's a lot of things happening in the world, by and large. To machinery geek out just a moment here. Speaking of harvest season, saw 4 crews yesterday. Got a little pitter patter of the heart. One of the crews, sir, S98s. S98s.
Rocking the gleaners.
Awesome to see.
Yeah,
I had a John Deere cart tractor, but Gleaner combines. That was nifty.
Yeah, you don't see many of those running around.
You don't. And what's even cooler, every one of them was a 23, the Centennial Edition with the big fancy size. Oh, buddy boy. Whew. Neat.
Yep, they had a.
And what I saw out in the field, sitting there parked at dusk last night, 860 Massey by an S-Series International straight truck. Woo, buddy.
That's a throwback.
Good stuff.
Throwback to the 80s right there.
Shit, am I in a DeLorean? I think I'm home.
Yeah. Yeah, I think that's
Damn it, Aaron, I told you to shut the truck door.
They have this time of year, do you see some cool stuff like that pop up?
Oh, yeah. And it's kind of back to after you did your pilgrimage walk and back to that, we don't have that newest stuff in wheat country. Right. This is the time of year. Well, there's an L3, there's a 6600, especially get into that north central Colorado, man alive. Yeah. There's some big time antiquities out in that country.
There's
For instance, by Briggsdale, Colorado, last week I saw a Massey combine older than me. I'm 46.
Well, there's that group of guys down around Yuma that does that. They do that classic combine harvest.
Yeah, one of our salesmen, Kirby, does that. He posts that at his farm. Yep.
Yeah. They do that every year, and everybody breaks out their old whatevers and brings them by.
Yep. Right about now, actually.
And there's quite a few of them in the field. I mean, it's not just 2 or 3. It's like 15 or 20. I mean, there's quite a bit of old iron out there running around.
There is, and that's old iron. Those guys have 55s and 95s and 21, 90, Super 92 Massey Harris. And I had a Super 82 once. That's one of them old cabless ones. Mm-hmm. That cures you real quick over old combines are cool. Yeah, I made a round in that combine and sold it to my buddy.
Yeah, those combines, the ROPS on those combines is an umbrella. So it's
right.
Very.
When we get to the world where you can bring in your 8820 to the classic combine thing, here we go, boys.
That's right. Yeah, there you go. Yeah. But they had that's very cool to watch some of that stuff out there run. And I always think about that kind of stuff. And there's the guys, when that combine came out brand new and there were no cab or anything on it, and they're thinking to themselves, like, I don't know what they could do to make this combine any better.
Right.
You know what I mean? Like this, I don't know what else they could do to make this better every time. And here we are now where we're at. But it's just totally fine to put the handkerchief over the face, keep the dust out of your mouth, and be like, this is the greatest thing ever.
Yep. That's how when my dad was a little shaver, that's how he spent every Thanksgiving break. Oh, let's go finish Milo.
Yeah.
And what says fun like no cab in Milo?
That, yeah, good times.
That's living.
Yeah, good times. Well, speaking of combines, I think, so I was talking to a good friend of mine, a good friend of ours, actually, Nate Weishart, the other day. We were talking about some stuff, and he brought up a pretty good topic that I think, and he's going to come on the podcast. We're going to talk about it with him. It's his idea, but it's something I've been tracking for a while and just kind of seeing how things happen. And I've talked about quite a bit that to tail into 25, into 26, which we're in the middle of the year right now, we're going to start seeing inventory start to come down, and things are going to change a little bit. And we were talking about that, and we were talking about the number of specific models of combines, basic class size combines, 7, 8s, 9s, 10s and 11s combines, series combines that were out there, and what was available in the marketplace, and watching that number start to fall. And as you watch that number fall, typical, supply and demand, economics 101, as supply comes down, demand's supposed to come up. And as demand goes down, supply is supposed to come up. Well, we're starting to see that teeter, and we haven't quite hit the equilibrium point yet where those two lines cross. That being said, as you watch these things come together, you're starting to see the pricing of the retail pricing come down. Like I made a point to somebody I worked with here at Farm Journal the other day. I was like, go back a year ago and count how many $700,000 combines are on the market.
Right.
And look at how many are out there today, right? It's a significantly less number, right? All the way, all across the board. You start looking at all of them, everything out there, the prices come way down. So that's the signal, as a auction. Typically, when you start seeing auction value rise, it's because of the retail number on the retail listing number has come down, right? So now that people are looking at that saying like, okay, so this is what the auction should be worth because based on the retail price. And that number starts to go the other way and the retail price stays way high, right, and the auction number's falling and this doesn't start to come with it. That auction number just keeps going down and down and down and down and down and down until it hits hard rock bottom. And we've obviously hit that, and that's kind of bounced back up a little bit. But the retail price comes down, so we're starting to see that equilibrium take place.
We're getting to what they call that healthy region, and it's like it's right here, just ready to intersect, but not just yet.
100%, not 100% there yet.
But just to throw in there real quick, out in the marketplace, that would coincide with, we are very near that, because combines are for, we're in, I need a combine now locally, and nationally we're in pre-harvest gear up. So this year compared to last year, way different as far as activity.
And you're exactly right. And as you watch those things come together and where they're at, you would think that, hey, the price of corn is $4, right? Why would anybody, and I'm not just saying that as a generalization, price of corn is $4. So as you're looking at that, you would think, hey, this is going to be some kind of discouraging point, because one day it's going from 405 to $3.97. It's kind of bouncing in that range back and forth.
Yep.
So we're seeing the spike up. A lot of it having to do with some concerns about pollination, what that might look like, heating the units at night, those kind of, just some weather thing kind of coming into that. But as you're watching as things come together, right now the market should be very inactive, right? You wouldn't think there'd be a lot of people looking at that.
Summer doldrums.
You would think, but that's a little bit of my concern, a little bit too, is that, hey, numbers are dropping, but it's the steady rebuild that we see coming back in, that we typically see from new deliveries being delivered and more used equipment hitting the marketplace, that's not keeping up. There's still a ton of machines getting pushed through auction markets, obviously getting sold to retail channels as well. But the amount of combines you see coming off the marketplace into those situations it's not a market where the supply and demand norms are working like they would normally see them work, where, hey, there's a reason for me to come buy a combine, and so it's coming back off the thing. You're seeing a lot of liquidation, those kind of things still happening, and the new sales that would generate used to go back into that marketplace aren't coming back into that space. So you're starting to see it slowly nose its way down. Now, that being said, you look at the last June quarter over quarter, combines did have a little bit of a peak up, but you would expect that coming out of the second quarter, because there's a lot of new deliveries that get that first and second quarter, a lot of new deliveries.
Fresh batch to select from.
Yeah. Right, exactly. So it's just a slightly nudge up, which I would call a seasonal uptick in the inventory, right? Now, what's next quarter look like? We'll see what that looks like. I highly anticipate that's going to come down, because everything else around it was coming down too. Tractors, sprayers, planters, all those machines, all were showing a tick down, which, again, there should be some seasonal uptick of planters in that first and second quarter. We should have saw that last time. We didn't see that.
Sure.
We didn't see tractors uptick. They saw them come down, right? And you didn't see sprayers uptick either. They were going back down. So all of those machines should have had a first and second quarter movement, but you're starting to see that third quarter, they're starting to move down. So I would highly anticipate to see the combines do the similar thing.
Yeah.
What I'm interested to see what happens is that last quarter of the year, when you start looking at how all the the stuff that's playing out auction wise, what you're seeing, a lot of the auction stuff that you're seeing, it's not dealer consignment auction stuff. Yeah, there's a couple big ones here and there, those kind of things, but it's not the volume that you typically see this time of the year, like June or July, August timeframe is typically a big dealer consignment, liquidation type.
Right.
So
big pre-harvest auctions.
Yep.
And it's been that way for 40 plus years. That was the one time a year. Yep. This is kind of the one time a year that the dealers would do auctions. Because I can remember being a kid, there would always be that, the harvest sale. There's always that harvest sale. There wasn't the big end of year splash like there is nowadays, or the mega March pre-plant auctions like there are now. But even back then there was the harvest. Well, let's wax that old UFT grain cart and haul her down to the lot and see if we can break even,
Right. Yeah.
That's always been a thing at harvest, because harvest equipment demands are so much more, and now I need it now.
Yep. That being said, the amount of auctions that you see being being posted right now are retirement sales, estate sales, farm sales, right? Not, and which is also indicative of the amount of pressure that the U.S. farmer is under from lines of credit, banks, and those kind of things. That they're like, hey, you guys need to down. I mean, a lot of downsizing going on right now, and that's sad. That's sad that it's happening. But as you watch that happen, so that's the dynamic that's associated with that on the auction thing is some of those lines have been blurred a little bit. So if you look at a Big Iron or a Purple Wave or any of these big auction companies out there that have an online presence, primarily online presence, Solomons now as part of Big Iron, they have that big online only presence that they have. I could have, Casey Seymour Farms and go list my stuff in there with just a bunch of other stuff that's just mixed in with everybody else. So like the idea of there's a premium at those, farm sales, which there always will be and always has been.
Yep.
That kind of gets blurred a little bit when my 10 or 15 pieces get lumped in with another 35 or 40 pieces. And it's just like that blending you're seeing it now. It's all in how they market it and highlight it and those kind of things like that. But
which they do a good job of trying to
do a great job of doing that
all the time. Yeah. But I can tell you as someone hopelessly addicted to that app on my phone as a weekly participant, whether I can afford to or not, it gets lost in the shuffle, which is back to your point.
Yep. So as you watch those things happen, I feel like I'm not overly concerned about the pricing of used equipment going into the fourth quarter auction cycle because the amount of equipment that's going through the auction cycle is more one-off farm sale than it is, hey, we're going to sell 40 combines today.
Right.
You know what I mean?
There's
definitely some of those sales going on. Yeah. There's definitely some of those sales going on. There's sales closing today in Canada where they're selling a bunch of class combines all one whack. I mean, so like that kind of stuff there, they still happen. You still see it happening, those kind of things. But so kind of tie this all back together here. I'm doing the Donald Trump weave here, weaving a big story into one thing here. But as you go back to this,
because it's going to be huge.
as you go back into it and you're looking at how these things come together, we're seeing a stagflationish type approach to what we see happening in the marketplace. The amount of inventory is still coming down, but the demand is not just devouring the supply, right? The supply is coming down because of liquidations and stressors on the marketplace. It's not because of that. So sooner or later, those are going to hit and you're going to see that happen. I will tell you this. I was thinking about this before we got started. If you go back and look at, like, say, I'm trying to remember when it was, and I want to say it was I think it was 2020. It was when the world shut down from COVID. Corn for like one day hit $3, right? And every analyst was like, if it goes to $2.99, it's going to free fall to free, right? And it got to $3, and like the price of oil was like negative $36 or something like that. It was a crazy day. Well, obviously it rebounded from that, and I remember it go from $3 to $3.25 to $3.50 to $3.75, and a bunch of people sold a lot of grain at $3.75.
Right.
And then it went to 4, and then it went to $4.25, and then $4.50, and then I think it got back up to 5. And I want to say for a little while it was up around $6 in that kind of that time frame. And it might even be a little higher than that. But
yeah,
that was the deciding factor. Like, okay, at $3.75, I'm going to sell what I have because maybe it's a break even point for me or whatever it is. You saw a lot of people do that. We're kind of at that thing now where, we joke about here all the time that, $4 is the new $3 corn type of thing. We've talked about that a lot, and I've talked with other analysts on here about that same thing. So what's it look like if we get to $4.50 corn? What's it look like if we get to $5? What's that next big surge in the marketplace look like?
They're all going to feel on the machinery side like it's $1, not 50 cents.
And what I found in my time frame doing this, that it's not the run up of $1 that drives the equipment marketplace. It's a quarter at a time is what drives the equipment space, right? Every quarter that you see add to that gets more confidence back into the marketplace, and the next quarter gets people a little more excited. And sooner or later, you're 75 cents off the low, and now you got people excited about coming in and buying something, right?
Well, in a slow climb, they have more confidence that there's a foundation to it. than
exactly.
3 to 4 to 5 to
yeah.
Nobody's selling a thing at that point because it could be 8 tomorrow.
Right.
Could be $1. You know.
Yeah. I think that's the swing. Because no one sits on the sideline and says, well, as soon as corn gets to X, if it goes from $3 to $4.50, then I'll come buy something. They're looking at it from where do I need to sell? What am I going to sell? When am I going to sell it? How am I going to sell it? All those kind of things come into play, and they start factoring in those things, and that's what you see move the marketplace. These little quarter turns at a time, and that gets more and more people into the marketplace. Some sooner than later, and some are selling sooner than later. But it's all one of those things that come into play where you see all this stuff happen, which goes back to the explosion of on-farm storage we see out there now, and the amount of on-farm storage that we see out in the marketplace right now. Well, a lot of that's because of what we saw happen through, the 2012 $8 corn thing.
I was going to say,
that was the birth of that.
Over the last 10 years, on-farm storage really has erupted, and that is because of the 11 to 13 market that we had. Because I remember in this part of the world, a product just showed its face on the market right in time for that run up in price, and we sold tons of them. A little thing called a grain bagger, and everybody had bags because we are holding on to this. This is gold, and that spurred that worked, but we need some bins, and that's what away we go. To your point about where the market currently is at with the, stagflation or just kind of coming off the backside of it, and the demand and the supply intersect, the buyers are out there. You kind of at the dealer level, you kind of got to create the demand. Supply there's still plenty of supply. It's way healthier than it was, but there is still an oversupply. Call a spade a spade. That being the case, none of that stuff is $50,000 sitting there collecting interest on the lot.
Right.
So it is every day that passes is a decent amount of money. That being the case, you have to do something to create the demand.
Right.
Maybe it's starting with the bottom ones, and you gotta, whether it's some kind of an interest program or a special allowance trade up program or something. We're not in a market where, and guys know this, but it's worth saying, we're not in a market where guys are walking in the door. And in fact, given technology, that market really isn't a thing anymore. But we are in a market where the buying will and can happen, but the dealer has to initiate it every step of the way. Is that
100%? Makes 100%. Yeah.
Like if this has just been my experience across the nation. If you get to that, well, we're going to kick this around and call you tomorrow or maybe the next day. Ooh, you better call him.
Well, yeah,
it's not because it's too expensive or they can't afford it or they don't want it. It's the kind of, I don't know what to do with my hands. Like, this is a buy, but last year on the auction, I saw one, bring this. Is this too much? Like, no. Where do we do? Where's the punch out? Where does it smooth out the best?
Yeah. I think the thing people have to remember about a used equipment buyer is that everybody has a trade cycle, right?
Oh, yeah.
Some guys are very rigid about it. Every 3 years I'm doing this. Every 5 years I'm doing that. You've got this very rigid cycle, but times like this, that 3 years might turn into 4, right? And that 5 might turn into 6, right? So, as you're looking through,
you have your other guy, Casey, who say he's a 5 to 7. he might jump to 3 because of the supply.
Yep. And he has an opportunity to jump out of a box that would normally have to be kind of relegated in a decent time. But they don't have to come to the marketplace. Even when times are good, they don't have to come to the marketplace, right? There's plenty of tax deductions that they can go outside of equipment right now. Trust me. Easy button. It's the easy button, right? It's the biggest one you can push.
It's December. Better get a combine bought. Oh, we prepaid fertilizer. Shut up.
So as you're looking at that, that's where in this kind of what we're talking about here is that you're seeing that they're not coming to the market because they have to. They're coming to the market either because they want to or it's a really good deal, right? And they can justify that with their banker, whomever, right? Hey, this is a really good deal. I'm buying it, X percent less than I bought the same one, as a percentage of new or whatever, however they're looking at it, year over year. Or, hey, this was $400,000 this time last year. Today I can buy it for $350,000.
Exactly.
Right? So that's some of the justification that you're seeing there. So you're exactly right.
The best place to find that guy and the best guy in your dealership to be friends with to get that guy, service.
Oh yeah,
100%. That guy's going to trade off of a shop estimate.
Yeah, 100%.
Very often
because they're gonna look at like, hey, we've done X, Y, and Z this machine every year except this year.
Yep.
Do we want to do that again, right? And if we do this amount of work, that means we have to run it for X number of years to get this, or X number of bushels or whatever it is that you're calculating then to get that to reclaim that money that we put into there, that investment, right? So I think that's the thing, right? So and that's what we're seeing right now. It's like the call to the market is, kind of sometimes like when I'm with my wife, hey, Casey, can you take out the trash? Yeah, I'll get to it. And 6 months later, I'm taking out the trash, right? So it's one of those things like where you just keep kind of. There's always a reason why you don't need to do this, and I think that's what we're seeing right now in the marketplace, where supply is coming down, but demand is still. There's a point where demand, supply and demand hit, and that point is a little bit lower than where the market's at right now, but we're getting there. And I think as soon as we get there, we'll see more of a ginning of the marketplace at a faster rate up.
Ginning, nice.
Yeah, I like that.
Way to throw the cotton guys in on some combine discussion.
Yeah, don't use a combine though when you're picking cotton. That'll create a whole problem.
That feed accelerator roll, boy, that's problematic.
It might clog the rotor a little bit when you're running up through there. So
a little bit.
Okay. All right. Good place to stop, Aaron. Folks want to reach out to you and get some more of your High Plains wholesale deals out there. What's the easiest way to do that?
Okay. Well, I tell you what, High Plains Wholesale. Catch him on Facebook, TikTok. Specials on there. There's static posts. There's videos. Usually, about 4 or 5 a week. You can catch me on Twitter under my name, Aaron Fintel, and the same video specials are there. You can call me, text me, 308-760-1193, or email me, afintel1l at 21equip.com.
Right on. Good place to go check it out. Aaron's always got some good deals out there. Well worth your time to go suffer through his presentation that you see there.
I do try to keep it a little lighthearted,
Yeah, good place to go and check out some good stuff out there, and a lot of good equipment out there. As we're talking about, good sell prices and everything else. So go check that out. Well worth your time to go do that. I want to thank Greg Peterson for being on this podcast as well. I want to thank Sean Hackett being on here talking about what's going on in the marketplace. So appreciate you guys being on there. You can find me on Facebook, Twitter, Instagram, or X. I think I'm on TikTok too, if I remember right. Anyway, it's either Moving Iron LLC or Moving Iron Podcast. Check it out there. You can see all the stuff there. And we've got a couple things coming up that I think will be worth your time checking out. If you're a dealer, you want to come to Moving Iron Summit, hit me up. Go to the events page over on AgWeb, and you can see that there. And you can see that coming up. Also, Greg Peterson and I will be up at the Yield Academy at the end of the Pro Farmer Farm Tour crop tour, and you can see we're going to give a couple presentations about what's going on there. You can find the audio version of this podcast over at agweb.com. You can check it out there. You can also see the video version of this over at YouTube, the Farm Journal YouTube channel. You can see it there as well. So with that, I'm Casey Seymour. With some iron, folks. Out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.